MYX Finance. MYX has rapidly become one of the most talked about DeFi tokens in recent months, attracting both excitement and skepticism across the cryptocurrency community. At its core, MYX Finance is a decentralized derivatives exchange designed to revolutionize perpetual trading on-chain. It aims to solve some of the biggest issues faced by decentralized exchanges: tokenomics, liquidity inefficiency, high slippage, and limited cross-chain support. MYX introduces what it calls a matching pool mechanism (MPM), an innovative system meant to replace traditional order books and automated market makers (AMs). This mechanism theoretically allows for more efficient capital usage, deeper liquidity, and better user experience for leveraged traders. With ambitions to handle perpetual contracts across multiple blockchains, MYX positions itself as a next-generation derivatives hub within the evolving decentralized finance ecosystem. The MYX token itself serves as the utility asset powering the MYX ecosystem. It is currently built on the BNB Smart Chain BEP20 standard and has a maximum supply of 1 billion tokens, with a circulating supply hovering around 200 million. The token's use cases include governance participation, fee reduction, staking rewards, and potentially acting as collateral within the exchange itself. According to CoinMarkets and CoinGecko data, MYX's total market capitalization has fluctuated dramatically due to its volatile price movements, at times reaching hundreds of millions of dollars during its peak. This volatility reflects both the speculative nature of the asset and the high level of trading activity surrounding it. As a DeFi derivative exchange token, MYX benefits from rising interest in decentralized leverage trading, a market that has gained traction following regulatory pressures on centralized exchanges like Binance and Bybit. The surge in MYX's popularity began around August to September 2025, when the token's price exploded by over 270% in a single 24-hour period, reaching an all-time high ATH of around 19.3. This meteoric rise made MYX one of the top-performing cryptocurrencies in the market at that time. Interestingly, analysts noted that this rally occurred without any major news announcements or listings, fueling speculation that it might have been driven by a combination of whale activity, short squeezes, and low liquidity manipulation. Data from Bankless Times indicated that during the same period, MYX Finance processed over 10 billion in assets, signaling growing traction for its derivatives platform. However, critics have warned that such volume spikes may not necessarily translate into sustainable long-term adoption, especially when trading activity appears highly concentrated among a few large wallets. Despite these concerns, MYX's vision and technology have attracted a growing community of traders and DeFi enthusiasts. The protocol's matching pool mechanism is considered its key differentiator. Unlike traditional AMs that rely on liquidity pairs or centralized order books, MYX's model matches buyers and sellers within a shared liquidity pool, theoretically minimizing slippage and improving efficiency. This design also enables cross-chain functionality, allowing users to trade perpetual contracts on multiple networks without switching platforms. The roadmap includes plans for zero slippage upgrades, expanded collateral options, and a smoother user interface aimed at competing with centralized exchanges. By removing network barriers and providing chain abstraction, MYX hopes to make decentralized derivatives trading as seamless as CEX expirations without the custody or regulatory restrictions. However, with innovation comes significant risk. MYX's tokenomics reveal a relatively high maximum supply of 1 billion tokens, meaning potential dilution risks remain if large token unlocks or emissions occur. Additionally, while the token's utility is clear on paper, its real-world use within the platform remains limited compared to established derivatives protocols such as DEX, GMDEX, and Perpetual Protocol. These competitors have built strong communities, stable trading volume, and consistent liquidity providers. MYX, on the other hand, is still a relatively new entrant trying to prove that its matching pool design can scale efficiently and safely. Another point of concern is market manipulation. On-chain analysts and traders on X, formerly Twitter, have accused market makers of pumping the price artificially to trigger liquidations and create hype, which could hurt retail investors entering at high prices. As of late 2025, MYX's price has cooled off significantly from its ATH, entering a phase of correction as short-term traders took profits. Analysts from multiple outlets, including CoinGecko and Bankless Times, have issued cautionary notes, warning that the price action showed red flags typical of manipulated market: low liquidity, disproportionate volume spikes, and lack of clear catalysts. The CoinGecko's forecast models project moderate prices for the future, estimating MYX could trade between 3.50 and 6.0 by 2030, assuming no major ecosystem expansion. these forecasts highlight the uncertainty surrounding the project's long-term trajectory. For many investors, MYX remains a speculative token with high upside potential but equal downside risk, depending on whether the team can deliver sustained growth and adoption. The bullish case for MYX rests on several factors. First, the DeFi derivatives market is still relatively small compared to centralized futures exchanges, meaning there's substantial room for decentralized protocols to capture market share. If MYX continues to grow trading volume and user adoption, it could become a leading player in this niche. Second, its unique approach to liquidity and risk management could attract institutional interest or large-scale partnerships down the road. Third, if the project expands successfully into multiple blockchains, it could benefit from broader interoperability, offering traders seamless access to leverage positions across ecosystems like Ethereum, Solana, and BNB Chain. Lastly, the token staking and governance models fully implemented give MYX holders a meaningful role in the platform's future decisions, increasing long-term value retention. On the flip side, the bearish case for MYX focuses on sustainability and credibility. The massive price rally has raised questions about transparency, liquidity depth, and fair market behavior. Regulatory scrutiny around decentralized derivatives trading also poses a potential threat. Governments may view such platforms as unregulated futures exchanges, which could result in compliance issues. Moreover, with established competitors already commanding strong user bases, MYX will need exceptional innovation and consistent performance to stand out. Any technical failures, exploits, or liquidity drains could quickly erode market trust, leading to sharp sell-offs. In a market known for volatility and speculation, maintaining confidence is as critical as innovation. Strategically, traders and investors considering MYX should be clear about their time horizon and risk tolerance. Short-term traders might view MYX as an opportunity to capitalize on high volatility, while long-term investors should look for evidence of actual ecosystem growth such as rising total value locked TVL, consistent trading volume, and meaningful partnerships. Diversification is key, allocating only a small percentage of one's portfolio to speculative DeFi tokens like MYX is generally advisable. Monitoring token emissions, development updates, and on-chain metrics will be crucial for making informed decisions. Above all, risk management, sizing stop losses, position sizing, and awareness of liquidity traps is essential when engaging with volatile assets like MYX. Looking ahead, MYX Finance could evolve in one of three main directions. In a bullish scenario, the team successfully scales the protocol, adds major partnerships, and maintains transparent operations, driving both adoption and price growth. In a neutral scenario, MYX stabilizes as a mid-tier DeFi platform but not dominant steady users without explosive growth. In the bearish scenario, liquidity dries up, enthusiasm fades, and the token undergoes a prolonged decline, leaving early entrants trapped in illiquid positions. Ultimately, MYX Finance sits at the crossroads between innovation and speculation, offering immense potential but carrying equally immense risk. In conclusion, MYX Finance represents both the promise and peril of DeFi's new frontier. Its technological ambition, reflected in the matching pool mechanism and cross-chain derivatives model, could position it as a disruptive force in decentralized trading. Yet the recent price frenzy, accusations of manipulation, and lack of proven long-term adoption mean caution is warranted. Investors should treat MYX as a high-risk, high-reward asset for those who understand the volatility of emerging crypto projects but unsuitable for conservative holders. Whether MYX becomes the next big decentralized derivatives platform or fades as a speculative bubble will depend entirely on its ability to convert hype into sustained, transparent growth.